in just a bit. Welcome back. 15 minutes to go and we'll be wrapping out today's session. Girish Bakri, Director at Praxis Advisors is with us. Hitesh Eidnani is founder and CEO at Trend Tech Consultants, beg your pardon. Gentlemen, afternoon. Thanks for being with us. Hitesh, let me start with you. Quick call on the charts. Tremendous move up, tremendous recovery.
Yes, absolutely, and let us step back and take a look at things from a longer term time frame based on Elliott wave analysis. The first wave that started in 2003 and lasted all the way up till January 2008 took the index from 1000 to roughly 6350 levels on the Nifty, and as we know, the second wave took us all the way down to 2250 and ended in October 2008. From then on, we started a much larger third wave, which would take us all the way up to 13,000 or 14,000 by the next 4 to 5 years. So we are right now part of this longer term third wave, and the bull move is pretty much intact. I mean, we might have minor corrections or longer term corrections, but we're still on track for 13,000 or 14,000 in the next 4 to 5 years. And we've seen a pattern of higher tops, higher bottoms from March 2009, and as long as we don't break 4667, this pattern of longer term higher tops, higher bottoms is still intact.
But all right, fair enough. That's slightly longer term, Hitesh. For the near term, how are you calling this market? We broke the 200-day moving average, bounced from it earlier today.
Right. Yes. The 200-day moving average is a very important point. I mean, there are a lot of long-term investors, pension funds, long-only investors who would definitely sell off if we break the 200-day moving average and then close below it for 2 consecutive days. Today we just tested it and bounced back very smartly from there. So this is one number that we need to all keep a very close watch on. If we break the 200-day moving average and close below it, we can take a good look at 4667 coming up.
Does today's market and the bounce from the 200-day moving average give you confidence that there's tremendous resilience out there?
I think there's a lot of weakness globally. I mean, this could be just a bit of short covering that's happening. From a trading perspective, I mean, I'm currently short, and I would advise everybody to go short with 5200 as a stop loss, because there's a lot of nervousness. Any kind of news that comes in the market is definitely going to be sold into. We could wake up with a gap down again tomorrow morning. So currently, the short term, there's a lot of weakness.
Right, Girish, good afternoon. I've been told that this is a trading market and hence technicals are all important, but more fundamentally speaking, I mean, you look at the concerns that you're seeing across the world, Europe, China, and you probably get a scenario where it's tough to consider a very strong move up or a strong rebound in the markets at all. Do we continue to stay range bound? Is there potential to get another 10% cut from here? What is the best and the worst case scenario that you're looking at?
See, the FT has been broadly sideways for the last 11-12 months. I mean, like I said, we've had a pattern of higher tops, higher bottoms, but ever since the gap up after the election, we've been roughly in this range of 4750 to 52, 5300. Ideally, we should see a nice trending move either upwards or downwards. Currently, the bet is downwards with what's going on globally, but we'll have to take a call. If the market crosses 5200, I would go long above that, but below 5200, I'm very comfortable to stay short currently.
Okay, I think I was just putting that question across to Girish. Girish, could...
Thank you. Is back on the futures, 3.5 odd points or so right now. 2930 odd points off, 5064, 16832 on the Sensex, 162 points off. Girish, you were talking about China a little earlier on. The Chinese market is off 5.5% today. Forget about what it's done for the last 6 months. Today it's off 5.5%, and you got a market like India, which is pulled back pretty much all of what it was trading down with a little earlier in the day. What does it tell you about this market? Does it tell you that it's looking weak, or does it tell you that in the face of markets like China, this market's holding up?
Well,